Hey traders and investors, Todd Gordon here with tradinganalysis.com and Inside Edge Capital. Hope you're well. What a move in the market. So I have two pieces of good news and one potentially piece of bad news. I'll give you the two pieces of good news first. Okay, so let's jump in. Obviously we know the growth segment of the market has just been ripping higher, led by chips and Nvidia's historic quarter. So, this is not a setup that was very hard to see. I mean, this is video back on March 9th, just talking about the 786 target here in the SMH, the semiconductor holder. This is a video we did for members. If we look at the actual, where the market is now, the SMH, broke through all of that resistance. This is a weekly. We got through the 78% retracement, which, that's what we call the retracement of last resort, right? So if it doesn't hold 786, usually what you're expecting is for a move up to the 1272 extension, which is going to be at new highs. So 1.272, apply, and there you go. Okay, so as we get down to a few more degrees of wave count here in the semis, you can see that I think we're in a wave 3 here. So the minimum you would expect in blue 3 would be 100% distance traveled in one, which was 125% from the lows. That would be the minimum target in wave 3, and that's all the way up here, 184 in the split adjusted SMH. Okay, now we obviously know what happened with Nvidia breaking to all-time highs. Just we've been doing a lot of videos lately, all suggesting that we are moving higher. Okay, I did an outlook over here on my Inside Edge channel for investors. We rebalanced the portfolio, up our allocation of growth, increased AMD, increased Nvidia, and we're looking for a move through that key August high in the NASDAQ, and that has now happened. So, what can we look forward to here in the future? Well, Nvidia, this is the daily chart, and I'm looking for some kind of correction that would complete the wave 3 move as we've got to new highs here. And at some point we are due a wave 4 correction, which, could bring you back here, maybe to the breakout point or even below and try to close that gap. We shall see. I'm going to continue to hold it. I have a good size position. Personally, I hold it in the wealth management business. I don't mind showing you here. So this is a cash account that I hold here. So I've had Nvidia, for a while, have a lot of XLK and Apple and QQQ and stuff like that in this particular account. Okay, so all in all, it's been good, but I do expect a wave 4 pullback here in. Okay, now this is going to be our preferred wave count right here, and what's happened in the NASDAQ 100 is we broke this first zone of resistance around 14,000. We have another cluster of resistance in here from about 15,120 up to 15,085, call it 15,800 in that area. So this should be the upside area. And again, that's 786. It's kind of buried behind there. Again, that's the 786 retracement of the all-time high down to the low. So, if we break through that 786, new highs in the NASDAQ are very much expected. Okay, now, the other thing that I find interesting that is another piece of good news is the breadth. This is daily rotation. And you can see XLK, technology, XLC, communication, consumer discretionary, all doing well here over the last several weeks. A lot of people are talking about the lack of breadth, how a lot of sort of the less than mega cap stocks, large, medium, even small caps are not really participating. Well, we're actually starting to see a little bit of a change there. Okay, you're seeing along with tech comms and consumer discretionary, all those guys are cap weighted. You're seeing equal weight, RYT, equal weight tech make a very big move into the leading quadrant. You're seeing equal weight communications sector ETF making a big move. Okay, so let's take a look at the 10-year yield. I've been saying this a lot on this channel that we need to start seeing the 10-year yield drop, and that is going to continue to help the rotation into growth stocks, right? It was the huge move up in yields that, during 21 and 22, that was making the argument to hold high value, high valuation, overvalued stocks in the face of increasing interest rates. It makes that sort of trade-off hard to justify. Well, as soon as yields started to top out is when we started to see the rotation back into growth, which happened pretty much in the start of 2023. Well, we've held resistance and we've backed off. That's the good news. The bad news is, as we look over here and flip over to this chart, problem here is the yield spread between 10-year and 2 is getting further inverted. It's inverting further, which that's usually the sign of a coming recession, okay? But however, what's interesting is this is the nominal yield spread. So this is the nominal reported 10-year yield subtracted from the nominal headline reported 2-year yield. And you can see with that move down from resistance on the 10-year yields, we saw a further inversion of the yield curve. However, it's not the real story. If you look at the real yield curve, which is the 10-year yields, okay, so we're looking at expected inflation 10 years out. We're going to subtract that from the nominal rate, do the same thing. We're going to take expected inflation 2 years out, subtract that from the current reported nominal 2-year yield. That is going to be your real yield spread. When you factor in inflation, you can see we haven't seen that much of an inversion on the real yield curve as we have in the nominal yield curve. So I think we could continue to see a rotation into growth, and we can go up and reach for those higher levels in tech stocks as well as communications. And hopefully consumer discretionary joins the party. But all in all, we've been right on the upside, and a lot of bearish sentiment out there. A lot of investment advisors and research guys who own companies have been pretty bearish. And I think if you really look below the surface and didn't try to really, but kind of push a lot of fear, which is easy to grab people's attention, you can see that the market was certainly set to move higher. So where we go, I'm always looking over my shoulder. It's been a really, really nice move. We made some very good money for our wealth management clients and the research clients as well. We're holding a couple chip stocks here in our stock swing desk. We have a few semi names in there, and it's been all good. So, but continue to look over our shoulder. So thanks. Hope that helps, guys. We'll see you in the next video update. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.